This is a journal entry for 15th January 2026. I took 2 trades and both were losses. I had a bullish bias for the reasons mentioned in my pre-market Obsidian journal. Let me explain that to you on my chart. Yesterday we had a large range day where we sold to this new week opening gap and reversed immediately. Since midnight we have been trading higher. My drawn liquidity was this CPI high, which was relatively equal. I was anticipating this to be traded. I was anticipating a classic buy day profile if we drop lower at 9:30 AM or a New York reversal profile if it starts pulling higher and shows signs of reversal. I was anticipating 9:30 to drop lower to this pre-market sell side and then go higher. That was my plan as was written in the pre-market analysis journal. So let me show my execution. This is the 1 minute chart. Market opens at 9:30, drops lower, takes this sell side and forms an SMT. Price closes above the 9:30 first presented fair value gap and starts pulling higher. I was targeting this old 9:30 first presented fair value gap. Price moves 50 points in my favor till this buy side liquidity. However, I do not move my stop loss to break even, nor do I take any partial. And price takes my stop loss. Thereafter, I reduce the quantity by half, take second trade on this inversion. It formed an SMT, closed to immediately above this CB and the 9:30 first presented fair value gap. So I was anticipating a move till this highs or at least this high. I entered here with my stop loss below this consequent encouragement of this fair value gap because I was anticipating this to act as a breakaway gap. But price immediately takes my stop loss. And I call it a day here. What did I learn today? Number 1, that always book your profits or at least 50% of your profits when a certain liquidity pool has been reached and move your stop losses to break even to avoid taking further losses. Here, greed took over me. I had a winning streak of 2 days. I was too excited that these highs would be taken immediately at market open. So I was anticipating large profit. I have realized now you don't need 100-200 points to be profitable. You just need small base hits but a larger account size that would eventually come to you. So you just have to follow your process and stick to the plan of taking base hits and moving your stop losses when a logical level is reached. This second trade, I reduced my quantity to half. It could have been avoided. Even in my pre-market journal, I had decided that I want price to take the pre-market session lows. However, I did not follow my plan. There was excitement, I was overzealous and FOMO took over. I was anticipating a big profit day today and did not book any profits and took another trade contrary to what I'm trying to achieve of taking one trade at a time. And that is how I ended my day in red. The insights I gained today is always book your profits when a logical level is reached. Move your stop losses to break even. If your stop loss is hit, don't immediately jump into the next available trade. The bias was bearish for today and I was totally wrong about it. Hence, it's always better to wait at least half an hour to take another trade if you intend to. And meanwhile, reassess your bias. From tomorrow onwards, I've decided to just take 50 points and get off the table. That's it. I don't need 100 points, 200 points. I just need base hits to earn a living. And that would be achieved by taking one trade at a time. Thank you.